Hedge funds are suing the SEC. This time, the fight is over for short sales. What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel if you're new. Today, we have a ton of stuff to cover, so all I ask in return, of course, is to watch until the end. Hit the like button. It's free. Without further ado, let's jump right into the video so that we don't waste too much time on the intro. So, hedge funds just sued the Securities Exchange Commission, alleging that the agency broke the law when they finalized the pair of rules aimed at collecting data on short sales earlier this year. As many of you know, we covered that the SEC has put out transparency rules. I'm sorry, I've been a little bit sick, but the SEC has been putting out transparency rules to get short sellers to display more data so that it can be collected on a shorter term basis and all this other stuff, right? Well, hedge funds are basically saying that the SEC ignored how the rules interact and that they harm investors, which makes absolutely no sense. And you can see that right here. This is what hedge funds argue. And if you want to read the full article, I'll leave it pinned in the comments down below under a couple of the links. Okay. Next, I find this very interesting that when you search Citadel or you search hedge funds, what pops up is Citadel is handing back about $7 billion in profits to clients. This is the Wall Street Journal, Bloomberg, and New York Post. Now, I find this interesting because it's clear as day that Citadel, Ken Griffin, pays these news outlets to put out whatever he wants. And the reason for that is because what people are talking about is the loan Citadel just took, but we're going to touch on that in 1 second. But what's being shown to us is that it's sunshine and rainbows over at Citadel, right? If you look through the actual article, it says Citadel is handing back $7 billion in profits to clients. Citadel is planning to give their investors back, right? $7 billion in profits that were earned in 2023 alone. So they're saying Citadel is doing much better than every other hedge fund, and they are not closing down and handing back money to clients. They're handing profits to clients. So if you invested in Citadel, you are doing solid. But the real narrative is something different. Before we get into the loan, first thing I found, Griffin agrees to buy up $164 million in air rights from St. Patrick's Cathedral. Ken Griffin of Citadel and Steve Ross of Vornado Realty Trust agreed to buy up about 525,000 square feet of air rights in New York. Whatever this plan may be, whatever is going on with this, let me know your thoughts in the comments down below. But the real smack is this $400 million loan. This is what people are talking about. This is what is spreading on social media. Basically, Citadel Securities says to Bank of America, we need more money. Bank of America, you good, bro? Citadel Securities says, yeah, everything's totally fine, right? We're doing record profits, right? Our security sold, not yet purchased is not a problem, right? And Bank of America says, all right, well, how much you need, bro? Citadel, $400 million. Citadel Securities launched a $400 million loan on Monday with proceeds to be used for general corporate purposes, including trading capital, according to Bloomberg, right? The new debt, which holds the lowest rung of investment grade ratings, will be added to the company's existing $3.54 billion term loan from Bank of America. Bank of America is leading the transaction, and institutional investors must decide if they will participate by Wednesday. So, Citadel Securities needs a loan on top of the $3.5 billion loan that they have, and the loan that they're taking, it has a junk rating. It's a horrible loan. They shouldn't take the loan. So Citadel needs the money, but what is being reported over on social media is that Citadel is doing record profits, right? If they had $7 billion, this is what doesn't make sense. If they had $7 billion, why wouldn't they take $3.5 billion, pay off that loan, just for example, for hoo-ha's, right? Pay off that loan, not even take the $400 million out because they already have it in profits, right? And then keep that $400 million for whatever they're about to do, and then take the $164 for that, for those air rights in New York, right? At this point, they would be left with over $3 billion in profits that they could hand out to clients. So whatever's happening, whatever Citadel is planning on doing, they expect to turn that $400 million into a ton of money. And like it says right here, to be used for general corporate purposes, including trading capital. So is Citadel using this shitty ass loan to go long on a specific play? Moving on, AMC, what just happened? And if you haven't already, guys, subscribe to my channel, please. We need 20K subs by the end of the year. It's unlikely that it will happen because some of you guys are stubborn and don't subscribe, but it would be awesome. Yesterday, we announced that AMC fully completed its $350 million at-the-market equity raise, which commenced November 9th. That brings the total cash raise since September 1st to $675 million and to a total of $865 million cash raised in the calendar year of 2023. All three figures are prior to bankers' commissions, legal fees, and related costs. Adam Aron says in quotes, "We realize that there are some who question these strategies in social media and sometimes loudly, but they do not shoulder the responsibility of building a multi-billion-dollar enterprise through highly challenging circumstances, and they fundamentally don't understand how absolutely vital, indeed essential, it is that AMC has robust cash reserves. Having ample cash on hand is the best single arrow in our quiver to withstand the pressures caused by an industry-wide box office that is still more than 20% below pre-COVID levels, combined with 5 months of writers and actor strikes that crippled film production in 2023. He finishes this tweet off by saying, "Our successfully raising a boatload of cash is extremely good news to those who care about AMC's future, and correspondingly extremely bad news to those who wish AMC harm." It's good news, he says, to those who care about AMC's future. In other words, if you care about a short squeeze, fuck you, he says. Also, he says, bad news for those who wish AMC harm. So, if you want to short AMC, fuck you, he says. So basically, this is as clear as day what a CEO is meant for, and we've talked about it. He's meant to fundamentally make the company do well. Now, keep in mind, this cash raised $865 million in 2023 so far, which most of it or some of it is dilution, so it's not the best way to raise cash. This is all before all of the fees, right? So you get a salary. That salary is going to be before taxes. This is basically what this is, right? This is all prior to bank commissions, legal fees, and related costs. So it's not a total of $865 million, roughly. Somewhat below that, right? Probably around 600-ish. So AMC raised $350 million in new equity capital before commissions and fees through the sale of appropriately 48 million shares at an average price of $7.29 per share. Using a portion of this money, right, AMC rebought $50 million of their 10% lien notes due 2026. So they're starting to try and clear that up. They did that at a discounted price of almost 20% plus accrued interest. And they also exchanged $12.275 million of their 10% lien notes due 2026 plus accrued interest for approximately 1.6 million shares of Class A common stock with an implied value of $8.19 per share. These are the moves that AMC just did, and we are down 2.67% because any stock doesn't like dilution news, but overall this is just being controlled. There was not really any price action. We are coming up on this point of interest. In fact, maybe if it was early and we were a little off, just entered it, which shows that we may see a catalyst coming. What's interesting enough, last week I said we would see a catalyst coming into this week of some sort. I'm not going to say that that is the catalyst, but it's interesting to say the least. Overall, if you've been watching my channel, we expect this gap up pretty soon, as well as GameStop. We're going to talk about GameStop in a minute. AMC short interest back up to 10.74% over on Ortex, according to Ortex. 6.3 million shares available to borrow against AMC. 2,000 calls compared to 1,000 posts expiring in the money. Everything pretty evened out, except there are a lot of calls being bet out of the money. So if AMC is about to rip, they may be holding it till next week because there are way less, right, betting bullish on next week. Okay, so market makers want to take that premium for this week. Also, short exempts extremely high, 266,000. So you can see that they are holding this thing down. GameStop up 0.8%, $15.20, kind of holding up. We expected the possibility of a retracement down to $12 and still don't invalidate that yet because we have insane catalysts coming up with the Fed this week. GameStop, 350,000 shares available to borrow, 15,000 calls compared to 15,000 puts, also evened out. Plenty of premium going to market makers expiring out of the money for calls. Short exempts dropped, but if you look at GameStop's chart, so does the volume. So they are just matching it. Now, a bill has been introduced in the Senate. We talked about this, that where hedge funds are going to not be able to purchase single family homes, right? At least to the degree. But now this act is trying to force hedge funds that already purchase single family homes that they own over 10 years to have to sell the homes entirely. So what that is going to do, what is going to happen if this does get passed, right? You may see some sort of correction in the housing market. This is just something that may affect it. Now, heads up, Vast Bank in Tulsa having issues. They just got a court order that their affairs have to get in order or they will be shut down. And since we're on the topic of banks, Goldman just told their clients to stop shorting UK property stocks. What is about to happen? Finally, Warren Buffett selling $28.7 billion in stock rings alarm bells over the economy. We're not going to cover this because this video is already going to be extremely long, but there are only specific periods in where Warren Buffett sells his stocks and has cash on the sidelines, and usually the market isn't going to do well coming up to that time. But a lot of people are always wrong on what they're doing with their stocks, and it's just something to keep a side eye on. Now, before we get into some additional stuff, and it is important, get in the Discord. The link is right under the video. We talk stocks in there and crypto on the daily. I'm in there on the daily, so you can come talk with me. It's basically a big group chat of people who are trying to get financially free and have the best vibe. So whether you're a beginner or advanced trader, get in the Discord. The link is right under the video and pinned in the top comments. We also have options trading alerts in there. I post my positions as soon as I take them. And yeah, get in the Discord. Also, guys, real quick, if you followed me on Frenetically, you have to go in the settings tab and change your average trade amount, because for the challenge, I have it set at 300. That is what Frenetically personally funded the trading account with. Most of you guys are going to want to trade with way more money. You're not going to want to trade with 5 shares of a stock that I enter. So when you copy my trade, you need to have it set to your preference. So if I take a trade with $300 and you press copy and your thing is set to $1,000, you're going to have more shares than I do. Okay. And it's all about consistency. Also, if you guys want up to 15 free stocks, quick break for the Moomoo investing app. It's just like Webull or Robinhood, but better. You get free level 2 order book data so you can see what whales are doing, and this will help you dictate where the stock is going to go. Also, you're getting 5.1% on your uninvested cash. So if you deposit $100 in there, get all of these free stocks, sell them, and let's say you have $500 now, you're going to earn 5.1% a year on that. So this is basically free money. Use my link, sign up for Moomoo, and make a deposit. Let's get back to the video. November CPI inflation rate came out and it fell to 3.1%, in line with expectations of 3.1%. Core CPI inflation was unchanged at 4%, in line with expectations at 4%. This is the 32nd consecutive month with inflation above 3%. Now, that question lies, can the Fed pivot? The rate hike estimates for tomorrow are 0.25 BPS, S&P Global. No rate hike? Well, everyone else. That is what is being expected. And if S&P Global's right, you're going to see the SPY get absolutely smacked. Now, the question lies, right? Well, lottery stocks, they're not going to be right over everybody else, but if you look at the year-over-year inflation, yes, it has been dropping, but we're sitting at 3.1%, which is not the Fed's goal. They may have to do one more hike, and if they're gonna do it, it's gonna be this year. With that being said, be very careful trading the SPY. Trading at 462.81, hitting a relative high, continuing to pump, right? Up 0.18% on the day. The SPY is green, major cup handle breakout, and the SPY just continues to rally higher and higher. Just be very, very careful. We don't know what's gonna happen. It's gonna be whipsaw. I'm in very short-term calls, probably will close by the end of day today, and I am in longer term puts for the middle of January. Some stuff to watch. I don't have a lot of time to cover this because the video is already long. TMF, Aura, and Riot. Keep an eye on these. I think they are getting a little bit of a sale now in this zone. Tesla trade, Tesla retrace coming, bouncing off of this trend line as of right now, as we speak, right around 232.20. We want to see that hold right here, right? 232 to 234. If we break below this trend line, you could see Tesla retrace even further down to 227, 221.50, or even 218. So watch those levels for Tesla. Either way, I am still in my calls. I am pretty red on them, but they are for longer term, so I'm really not worried. In fact, I may be entering more calls on Tesla. Crypto, doing decent. Bitcoin is kind of just consolidating above 40,000. It is selling off a bit further, but watch that support at 40K. If we break below, watch 38K for crypto. Speaking of crypto, to close out the video, Bitcoin ETF approval, likely. Yes, it is likely, but just to add a sprinkle on top, SEC held a meeting with $1.5 trillion Franklin Templeton about its spot Bitcoin ETF. Michael Saylor thinks Bitcoin will hit 350K in 2024, which is a bold statement. Overall, guys, that is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. Make sure to check the links, subscribe to the channel, have post notifications on, follow me on TikTok, Instagram, as well as Twitter. I love you all. Lottery Stocks out.